Okay, everyone, welcome to episode 1 of Beyond the Headlines, brought to you by Trade Ideas. This is a new podcast we're going to try where me and my buddy Steve here are going to go through some major headlines that happened in the week. But because we're actually traders and we don't really care about what the reported headline is, we're going to look at the headlines, then we're going to go over to the charts and give what the actual price and supply and demand and footprints in the sand and institutional money flow, whatever you want to call it, are showing us. So we're going to take the headlines, we're going to go a little bit beyond. Just in case you're new here and this is the first episode, I'm just going to intro myself a little bit and then we're going to intro Steve and then we'll get right into it. So, I have been trading since 2006. Started to trade on the floor of the stock, or not the floor of stock exchange, floor of a prop firm. Got my go there for a little bit and then worked in the hedge fund industry for about 10 years. After that, I became a quantitative trader and a consultant here at Trade Ideas. And this is why this topic really interests me, where I have seen enough of the world outside of retail trading to know that there is no hedge fund on earth that is loading up their headline and saying, oh, everyone's buying Nvidia, so I'm going to too. So we're going to try to take a look at what happens when we go a little bit beyond. And I'm super excited for this. I think it'll be super cool. So, Steve, why don't you take it away and intro yourself to the people?
My name's Steve Gomez, and um, I've been trading since literally 95 part-time. I opened up a small $5,000 futures account with Lind Waldock in Chicago while I was a property manager, and Brad Williams might know. And I used to fight over this thing called a Quotrek. It was based on FM radio, and it would give us live data. So if you can imagine in 1995 having something handheld giving you live data, it was pretty cool.
Mm.
So that got me addicted to the market. I met Dan Merkin, CEO of Trade Ideas, and in '98, Brad Williams and I attended his seminar, and we were sold primarily because I wanted to be a trader, but I didn't live in New York or Chicago, nor did I want to move there and stand in a pit and scream for 6.5 hours. Just not me. So when I saw in April of '98 that people were creating this thing called Island or other ECN, electronic crossing networks, where you could bid and offer and make the spread. You didn't have to be a dealer and standing on the floor. I thought, I've died and gone to heaven. Let's go. So electronic trading was born, SOS trading, what have you. So we all kind of evolved through that same ecosystem, literally in the same office. A lot of people that are at Trade Ideas now. And fast forward, I met Andy Lindloff, who we'll eventually interview at some point.
Hmm.
He's also with us at Trade Ideas, but he's been really my side uh, kick trader partner, if you will. We trade very similar, and we started something in the early 2000s. We were going to China, long story short, but Chinese traders were trading the US markets in the middle of the night, and we were going over there and mentoring small pilot groups of different Western educator mentor type model. And a couple weeks in China was fun, but we realized at the time that WebEx or GoToMeeting was becoming a big thing, and we could share desktops with our Chinese students. And that evolved really into YouTube, where I think you actually kind of stumbled across us as
Yep.
Today Trader. And Andy and I did a lot of educational stuff on YouTube, met Brian Shannon on YouTube, Alpha Trends, and StockTwits, and kind of got involved in that community. We gave up the YouTube channel to work for Trade Ideas full time, and Andy and I, we sold that trademark that was called Today Trader. And so fast forward, here we are today. I've got, you know, 40, 50,000 hours of looking at chart experience. I don't have a CMT after my name like you do, but if 10,000 hours of anything makes you an expert, then I'll defer to what people would want to call me with the amount of hours that we've got. So with that said, I hate headline readers for many reasons. I don't mind being a little controversial here and there. I'll try to keep it toned down, but I like to dig underneath the hood and see what's going on. And there's no finer way to do that in this industry than looking at the price action to see what I like to say, does the chart really confirm the story? So we're going to try and look through some headlines and maybe we'll see, hey, this just does look good, or this headline isn't really showing us what the charts are showing us. So I think you and I probably have a lot to offer going forward. So with that, I'll turn it back to you and we can get into a few things we've got outlined to talk about.
Yeah, and I just wanna focus in on that in a second because I think there's a natural progression of all traders to believe that if I just read whatever's going on in the news and make my investment decisions off of that, my trade decisions, that'll be a good thing. And I think people learn very quickly that it doesn't work that way. I remember when I was prop trading, we had a squawk box, so a guy reading the news behind us, and there was some story about a CEO getting indicted for fraud. So of course I bring up the stock and I'm all in short right away, and the thing just ripped because the street already knew he was going to be indicted for whatever reason, and they're using the retail guys like me, their opportunity to cover their short because they already knew it was going to happen. So this is why I think this is going to be really important and really helpful to a lot of traders out there, because when the headline comes out, we all think that we should take a trade based off of what we see out there, trying to interpret the news. But quite often, you take the headline, you look at the chart, and there's two completely different things. So let's actually get into our first headline. This was a big one this week. I saw when it came through. It's not often that it happens, but the Dow Jones Industrial Average changed up a little bit, and it removed WBA, so it's Walgreens, and added in Amazon. So, first of all, just start with the headline. Initially, my reaction is, oh, that must mean Walgreens is an awful stock and probably a sell, and Amazon's a buy. Is that what you see from that as well?
I have a couple thoughts. First off, I have no problem with these changes in the indexes. I think it's needed as economies and technologies progress. And so in this case, Walgreens was your best bet, buy all, be all retailer. And I think it's being left in the dust now by the amount of prime trucks you see driving around your neighborhood. So that's a
Hmm.
quite simple assumption. What I don't like is when they start changing the weighting, and that's a whole other topic that you talk about sometimes, looking at an unweighted average. That's when it really starts to bother me, when people are leaning, putting their thumb on the scale a little bit, giving certain stocks a bit more weighting just because maybe they're more popular or whatever. I'm not going to name names, but
Hmm.
in the S&P 500, there's a few names in there that have a little extra weighting. And if it's an index of 500, let's make it 500. So I know that's probably a discussion for another day, but I have no problem. I think this is kind of cool, and it's probably warranted.
Well, yeah, and I'll be excited for that discussion because I think we're going to have an argument there. And first of all, I think this is going to be a cool podcast because I think there's a lot of places we agree, but I think more importantly, there's going to be places we disagree. And unlike a lot of places on the internet, I know we'll be able to have nice disagreements and then not call each other names and hate each other at the end. So I think that'll be cool. But yeah, I agree that, this makes sense. So the Dow, for people who don't know, it's 30 stocks. Dow's even, in my opinion, weirder than a market cap weighting like you were talking about with the S&P 500. It's price weighted. So it means that just the price of the company has the biggest effect. And we know from, companies like Berkshire Hathaway that, right, if you just refuse to split your stock, then eventually over time, Priceline, a lot of these multi-thousand-dollar companies, in my opinion, this is the weirdest one. But interesting to note, if you take the S&P 500 and the Dow Jones and you track it out for a long period of time, there's almost no difference. So it seems like at the end of the day, it ends up being a little bit normal. But yeah, so this is hasn't happened much. I think I read that there was only about 50 times in the history of the Dow that they've actually traded securities out. So I want to take a look at Walgreens and I want to take a look at Amazon, and we'll go into those. But however, I thought one thing was interesting before I turn it over. I went back and I looked. The last change that was made to the Dow was done in 2018, and they actually took out General Electric. And it seems like if you go back to this 2018 period, it was near the bottom. You had to sit many years before it broke out of this long base, but certainly wasn't the best time, in my opinion, to take General Electric out of the index. And if we go to WBA, which is what they added in, and then we go back to that same period around 2018, was right around here, right around $60, and then they're taking it out at 20. So it seems like my instinct reaction of, hey, if they're removing it, it might be a time to sell, and if they're adding it, it might be a time to buy. That might be the exact opposite. So do you want to take a look at either of these stocks, Steve?
Which ones in particular?
Amazon and Walgreens, just because these are
I,
the
I,
ones
I would look at
we have.
Amazon. Yeah, I mean, of course, we want to look at Amazon. I think
So
my family's keeping it.
full disclosure, because I'll always do this when I have something, but I actually bought some Walgreens on the close today, just because of that kind of thing that I saw that, hey, it might not be the best time to take a trade. So here's your Amazon. So,
Hmm.
you know, trade ideas, we have these picture in picture charts. So I've turned this one down here to a monthly chart.
Yep,
See a
yep.
kind of massive spike up into resistance. We got a weekly chart, a little base forming. So what do you think here? Do you think this is going to be a good move for Amazon over the next little bit, or do you think we're going to struggle at this resistance?
I think you really just can't go wrong at this point. I mean, I look at how much we as a family and for my two adult daughters and my wife and I use Amazon. It's exponentially increasing, and I think it's also. I'm going to go ahead and say I think it's recession proof. I think there's a lot of great deals to have on Amazon. You're not
Hmm.
driving in your car, you're not spending gas. If you're a Prime member, you're getting great deals. As a weekly chart, there's no moving averages on there, and I don't really need any, to tell you that that's certainly an uptrend. And we've had some consolidation here. When you go to that thumbnail, you can see that was a pretty deep pullback at the time, but we're right back here to highs again. I'm old enough to know that you're probably not going to cut through those highs like a knife through butter,
Hmm.
if you will. It's probably going to be some bumpy, resistance, if you will, over the next near term. So, whatever those prior highs are, was giving the price pretty good fits over the course of a year back then. So, we spent a lot of energy, in other words, getting back to these levels, but I see no reason why in the long term it just can't keep chugging higher.
Well, and that's the exact logic behind a cup and handle, right? You have this big V-shaped
Yes.
recovery, but then when it gets back to that high, you've got a lot of overhead demand there, a lot of people who are like, "Oh, it's finally back to my price, let me sell some." And that creates, some sideways chop for a couple days or a couple weeks, and then eventually when it breaks through, that's going to be the move. So I don't own any
Yeah.
Amazon right now, but I definitely agree with you on the we spend an exorbitant amount,
Yeah.
especially living out here in
One
the
more thought
woods. Yeah, so
on the technicals of, as you said, I love visuals, and the cup and handle is just, yes, it's a technical pattern, but why is it doing that? I love to explain it like mountain climbers in Everest and Sherpas. You get up, you get acclimated, and then you come back down to base camp. And the cup and handle is really nothing more than building a higher base camp
mhm.
on that second handle part. That's the second part. Or to even use another analogy, the battering ram trying to get through across the moat and but batten down the castle door. Sometimes the guy's got to pull back and dry the log off and have a meal and a shower and try again the next day. And the next time, is the right one. So nothing ever goes through straight shot. You've got to look left and anticipate where you're going to see some congestion, no matter what the time frame.
Well, so this is a perfect example why we look at the charts after the headline, right? Because you're right. If we have time, assuming that this is what's going to occur, right? If it's going to chop around, the beauty of that is, as traders, we got time. We can chill out. We can decide when we're going
401k,
to take a
buy
trade.
weakness.
Yeah,
Hmm.
wait for pullbacks, develop a plan on a shorter term time frame. There's no need to see the headline and just kind of chase right in. So all right, we've got headline number two here. We're probably going to stick to three a week, just so you guys know.
Hmm.
Next one is Lyft. This was absolutely hilarious, where they added an extra zero in their press release and basically said they made a 5% growth instead of a 0.05% growth. So that's
As I
a
understand it, it was, as they say, it was an intern who basically didn't have a fully understanding of basis points versus percentage points. I think that was the official explanation.
Well, that is amazing because you would hope that a publicly traded company with an intern doing that stuff would have some checks on it, but in this case it doesn't look like it. So,
So now what happens?
well, let's take a look because what was weird is that it spiked about 70% right off the news, But when it came back down, it didn't come back down all the way. It still, held some of that gain. So I wonder if that's going to be people trapped in. I wonder, what's happening there. But yeah, if it wasn't in turn, that poor guy, especially trying to get another job down the road. But yeah, this was the initial spike. Let's go into a daily chart. But we had the initial spike, and then the next day, I guess we still continued on. So, regardless of what happened to the mistake, the market seemed to have digested it okay. So I look at this news and I say, oh, well, if they made a mistake on that bad on their earnings, if I was someone, you talked about a headline chaser, if I'm a headline chaser, I'm probably buying right away and then potentially feeling that pain after the fact. And if I'm someone who's reading the headline after the fact, well, I may think that I have a beautiful place to take a short because that's, going wrong. But doesn't look like either of those is the case. So it might be one of those things where it's kind of chopped up both sides. So let's go back to the daily chart. So what do you think of this chart when it comes to Lyft?
I've got a thought. So we're going to look at the, like we said, on Lift under the hood and see what the herd thinks, see what the footprints in the sand really thinks. At first glance, it does look as if there's some sort of an attempt to hold up even after the aftermarket snafu. So what I want to ask is, can we add the best of all sentiment indicators and anchored VWAP from the bottom of that down candle, right at the yellow stripe on that daily?
Let's take a look at
And
that. Let
what
me
would that look
actually
like?
remove my EMA here just to do that.
Because as Michael does that, basically that what that's telling us is using volume as also an equation. What is the average price? How is the average person? Are they feeling underwater or over above water? So,
About, I mean, I drew in two
okay.
there, but we're about even on this one right now. So we're
Yeah, it's
about,
bleeding through a little bit.
yeah,
Bleeding
there it
through
is.
just a little bit. I'm going to ask him, Michael, to draw another one because we're going to hear this from me a lot. Go ahead and clear that out if you can. Let's
Mm-hmm.
just put a 10-day SMA in there. This is going to disregard the volume. But a lot of times when things gap up like this, and I have a chart that we're going to show you before we end the segment here of a stock I'm taking home long this weekend, very kind of similar to what we've got here. And there it
Mm,
is. See,
yeah.
I love Brian Shannon. I love the anchored VWAP, but boy, do I love my simple 10-day moving average. And it's probably pretty darn close to the bottom of that green wick today,
It like,
touching the 10 SMA. Yeah,
let's,
and let's just take that a step further. Algorithms and quants run the markets, human beings don't, and so they have key inputs. And it's my contention that I think the 10 SMA is one of the key inputs of major market making algorithms. I don't care who it is. I'm not going to name names, but the point is these price actions, they're OCD. They've got to go down there and flick the light switch and touch that line and then reverse if and then reverse equation updated. I'm not a developer, but something like that is happening from what I'm seeing visually on these charts. Therefore, I think that bottom should hold today if, in fact, the buyers want to stay in control of Lyft.
7 cents, Steve. It's the low of the day is 1550, and the 10 SMA right now is 1557. So within it crossed under it by 7 cents, which is
Seven
just
cents. That's all it needed.
insane.
That's a tag. That's like I said, OCD. It's got to flick the light switch a couple of times. Sometimes 20 cents doesn't do it. I literally will wait until it goes down and touches. And maybe that's just my paranoia, the way my mind works, but it feels like I know algos run this market and they need key inputs. So there you have it.
Yeah, I like there's a couple things that I'm actually really liking about this chart. So the first one is this prior resistance right here around kind of $15 to 1550.
Yeah.
We know that
Hmm.
there's some market interest at that price for sure. So you combine that with your 10 SMA and then so we're here looking at the monthly chart. So again, this bottom I always keep as a monthly chart because I want a really wide view of it. Look at that base. So this has been stuck between, let's call it 15, $16 down to maybe $10 all the way
Hmm.
since 2022. So we've got a year and a half or so in this base. And if we can break out of it, even if this kind of funny news is the thing that did it that should technically be negative news, if that's going to break us out of this base, then I think you've got a really long base to play against. And you have a pretty defined stop, right? For me, it'd be $15 would be kind of worst case. If I see it trading down there, it's probably time to go. If we break that base, we've got a pretty big move. And I noticed something up here that you might be looking at too, Steve. See a 13% short float on this name. So that's that's no small feat on something with 355 million shares. That 13 of them, 13% of them. So what's that? 50 million shares or so are floating out there borrowed. That would have to be covered if this thing really starts to move. We got you muted there, Steve.
Accidentally muted myself. With 1 minute to go here on the Friday, let's just pop in the S&P and see, what we look like.
Sure.
Um, like I said, I've got an idea of a chart that we'll talk about before we go out. Boy, they sure squeezed the shorts. That Nvidia basically was a real catalyst to springboard the market higher and squeeze the shorts even more.
Yeah, and that's kind of the last news story we have. I don't really have an official news story for it, but right, Nvidia is always on the news all the time. And this was really, in my opinion, the tail of the market this week. So if we look at,
Mhm.
this day, which is the 21st, we were pulling back a little bit into earnings. I saw a lot of people say, "Hey, this thing's priced to perfection. It's regardless of what the earnings say, it has to go." And of course, when earnings hit, we gapped up the next day to new all-time highs. And like Steve was saying, I think the rally that happened after that for the last few days was a short covering rally. There's a lot of people that were betting the wrong way going into it. If we compare that to the SPY, you're going to see pretty much the same kind of thing. So we had this pullback into this zone right here. And again, that's the 21st. And then the next day it gapped over this line that I have, which was just all time highs at the time. And then the same type of move. Now, this goes to a little bit to what Steve was talking about before when it comes to weightings, that a lot of the weightings of these indexes are have a lot to do with a lot of these big tech names. But one of my favorite indexes, the RSP, which does exactly what Steve was saying, is like, let's remove the big guys and let's do an equal weighting. Still the same kind of action. So it seems like for now, these AI things are kind of pulling everything up.
So, speaking of short squeezes, Trade Ideas has another portfolio master challenge that we call it, and it's a few days of accessing the live trading simulator. And I bring this up because this time the PMC is going to be short only. Last month we did long only. This month
Hmm.
is short only, and this is really important for people to understand, especially new traders. If you don't have your short game, to use the golf analogy, in order, you're not a balanced trader. If you're a tennis player and you're going to stand on the court and just hit forehands the whole time, you're not a balanced tennis player. You've got to know when to hit a backhand and you've got to know when to short. You've got to have that in your bag of tricks. So with that said, I highly recommend, and you'll probably see announcements. We've got a YouTube video also, or Trade Ideas does, about the upcoming tournament. But I highly recommend joining it and sharpening your skills at shorting, because it's totally different than going long, and there's no other way you can do it where you're not risking your own money
Yeah.
and getting live trading and feedback and P&L at the same time. So I tell people, yeah, there's a $2,400 tournament. That's exciting, but you're probably not going to win it. But if you go into this and you come out 3 days later after making a series of short sell trades and you're net positive with green, you've won, my friend. You've learned something and you've gained valuable knowledge with no risk, and you've shortened your learning curve of trading. So I highly recommend it. If you guys see that, sign up for it.
Yeah, and I liked your balanced trader statement, and the way it was taught to me was the old saying, if all you have is a hammer, everything looks like a nail. And
Mhm.
if all you can do is buy stocks, you are going to be biased to always buy stocks. So every pattern is going to look like a breakout or a pullback, and you're not going to be looking for things like, topping patterns and bear flags and things like this, because you're just filtering it through your mind of, it looks like everything's going to go up all the time. And especially in this market, Steve, I think if you can pull together some good money shorting, I think you're onto something. Because I always like to think that we've been in this bull market for a year and a half now. SPY's breaking out to new highs. This RSP I had up is breaking out to new highs. If you can get good shorting now, then when that inevitable next bear market, could be next month, could be next year, could be 10 years for all we know, when that comes, having that skill set is going to be great. Where most people are going to be looking to buy dips on things that are falling apart, you're going to have a skill set that says, okay, well, I can trade the other side when things eventually pull back the way they always do.
You'll have the wind in your sails of a bear market, and it'll come easy to you, and you'll be able to really, really progress. Um, Before we go, I've got a couple of charts we could look at. I'm
Absolutely.
actually long both of, I'm toast. I'm actually long both of these. Andy pointed this out to me today, and I'd never even heard of this company, and I don't even really need to know too much about it. I don't want to know too much about it. The short float is nothing really special, maybe 10%. But here's what I like about it. We get this yellow stripe here that shows us earnings have happened.
Hmm.
And I like stocks that have broken back above their 200-day moving average. A lot of resistance, like we said earlier, that kind of cup and handle effect. First, second, third time, finally it gets through. Well, now we've got earnings behind us, and the people who chase these gaps deserve to have pullbacks. You never want to chase this type of trade. You want to wait and wait and wait. And so, as luck had it, I don't have it on a scan. It's just you have friends in good places that say, "Hey, I just bought some TOST. I think you might like that chart." I pulled it up, and boy, do I like that chart. Gap up earnings. People sold the earnings right into, guess what? My favorite 10 SMA, the 10 SMA daily indicator, just like that other chart we looked at in Lyft, is holding. So this is one of my favorite patterns. I think the Market Explorer, Trade Ideas, even has something that looks for these right here, but that
Hmm.
is what we call a low risk reward entry. If you're wrong, it's a paper cut. If you're right, it's a pretty good move up through highs and you become a seller in a few days. That's one chart. Let's see
Wait,
if I can
before
bring
you
up
move
the,
on from that,
yeah, sure.
you hit the nail on the head that that's all that matters, right? None of us are going for 80, 90, 100% win rates. If you can get a 50-50 win rate, but you get a paper cut when you're wrong, and when you're right, you've got this thing that you can ride for a long time, that's great. And then always, I'm going to point to this all the time because I'm a bit of a longer term trader than Steve. That same kind of monthly chart of this massively long base where this has been chilling out. It collapsed. Something tells me this is probably like a D-SPAC or something. It collapsed and then it put in this massively long base for a period of time. So if you're getting in on a quick trade with a really tight stop loss and this huge base ends up resolving to the upside, I see $30, I see $40, which would be a double on this chart.
So let's go to the next one. And this one ties in with Nvidia, right? The reason Sound, which is an AI stock, gapped up is there were some rumors, and that's a headline, right? Rumors. But what is the chart telling us? Well, the chart's telling us every single time it tries to sell off in the daily, the wicks, they spike it back up. There's
Yeah,
some sort
wow.
of interest in there. I'm taking this home over the weekend. You never know. Merger Monday might be a reality. Nvidia did report, and they were rather cheeky and sheepishly coy when asked about it. They wouldn't really answer, and so again, we go back to the herd. I've seen this setup before. It's not giving away its gap. It's just making a lot of noise. And what's it waiting for? It's waiting for my friend the 10 SMA. It might even go before. I don't know, but I like the way it's just consolidating up here in its own new island breakaway.
Mhm.
So I'm going to take some home over the weekend. Not a huge position, not a small position, but enough to make it fun if something happens. But I'll be watching closely if nothing happens Monday or Tuesday, and you might want to do the same. We'll leave you with this. If the price ever does come down and touch the 10 SMA, the algos might take notice and keep an eye on what SoundCloud does.
Well, I brought that one up. I like the look of that one too. And right, so I drew an anchored view app. So this purple line is an anchored view app from right before the gap. This is what I like to do. And yeah, you can see on this day it traded below it and then rallied on this day and this day and this day. So if you get another 1 or 2 days of sideways consolidation, the 10 SMA catches up, and you are still above or playing with this anchored view app from right before the gap, then I think this could be an interesting one. Obviously,
Yeah, I call that
none of
like a
this is,
noisy holding pattern. It's
yeah.
just until something happens. Let's see what the catalyst is.
Well, and that's right. You're waiting for I the way I look at this is that you're baiting in shorts and you're shaking out
Hmm.
longs every time you have
Hmm.
these bottoming tails. Because at some point, this all of these candles looked very red and ugly, and we're probably baiting in a lot of people to short below it. So,
But let me
yeah,
leave you. That's a good concept. Let me leave with a kid because I'm a swing trader. So two things you mentioned. One, it never closed below the line. Whether it's the
hmm
10 SMA or the anchored view up, I don't care if it trails below and leaves a tail and a wick below. To me, it's all about the close. What is the closing candle, whether it's a 15-minute chart or a daily? And so, like you said, every day, midday, you look over and it's like, oh my God, it's a giant red candle. But by the end of the day, it just keeps reversing. It's a very buoyant type of action and staying above my key moving averages. If nothing happens in the news over the weekend, then it's going to take a couple days to sort out. But I'm fine just sitting, as I said, in the noisy holding pattern of this breakaway consolidation.
Well, and that's as you know, you mentioned as a CMT and a nerd when it comes to all that stuff. That was a Charles Dowism, what, probably 100 years ago now. The closing price is the most important price. And that's whether if you're trading on a weekly chart, you're waiting for that weekly close. If you're daily chart, you want to see what the daily close looks like. If you're a scalper and you're trading on a 5 minute chart, well, you still need to wait for that 5 minute chart to close. So I totally agree there. So I hope that everyone enjoyed episode one, and we are only going to get better as time goes on. We're going to continue to do this weekly. I always appreciate feedback. So, wherever you're watching this, if you're watching it on Twitter or YouTube or wherever that you stumble across this, give us some feedback. You know, give a like or a share, or retweet, comment below. Say, hey, I want to think more of this and I want to do more of that. If there is ever a week that isn't as action packed as this week with headlines, and there's some comments down below, we'll dip into them. So if there's something you want us to take a look at and you say, hey, I really like the story behind X, can you guys look at the charts for me? Whatever. X I meant as the random thing, not the actual stock itself. But yeah, just comment down below and let us know what you want us to take a look at. Maybe we'll try to sneak in a request a week or something like that. So, Steve, you got any
Always a
parting
great
words for
format.
our people
Yeah.
here?
Just that's always a great format. I do it live during my Thursday live sessions at on YouTube for Trade Ideas. I love it when people come in and give me the chart, and I don't ever want to hurt people's feelings, but I do want to give them the unabashed truth. And
Mm-hmm.
maybe I can save them money because, again, it's very easy. And I did it too once upon a time. You really get enamored with the story, and the chart confirms the story. And why isn't the market getting the story that I see? Well, you might be a year or two early. So if I can save somebody from just holding on the horrible downtrend that just sucks the life out of you day after day and sucks your attention, I'll tell them. And so don't be afraid to give us a symbol. We'll give you the unabashed truth.
Awesome. Well, thank you guys every much. Thank you guys very much for joining us. We're going to try to make this a weekly thing. So again, follow, subscribe wherever you're seeing this, and I'll see you next week.
See you.